Yeah, it's super interesting. The institutional money really coming into Bitcoin now. The institutional kind of wave of seeing, hey, this asset is not just something that nerds like to speculate with, like cyber nerds, but also like Austrian economic nerds or gold bugs. It's actually something really valuable. And I guess MicroStrategy kind of started that whole thing of institutional buying for Bitcoin. It was the first publicly traded company, and then afterwards, more and more people, more and more companies came. But honestly, it's even a little slower than I expected. Those institutions have a lot of processes and run way of saying, hey, we need to do speak with this person, and there might be actually a CFO out there that really likes Bitcoin, but he is afraid that if he now goes all in Bitcoin, also with the company, he might lose his job, like because maybe all around him people don't get Bitcoin yet. So there's a really interesting dynamics going on with institutional money and in connection with Bitcoin these days. And I feel like that career risk might flip a little bit in the other direction, where we're still now in the phase where it's a little bit risky and people are a little bit afraid of that. But at some point it will be risky not to have to not have a Bitcoin strategy. How do you look at that?
Oh, I think you're spot on. I think we're in both those key points. So one is career risk. It holds people back, which is a real shame. But also at some point that will flip, and it will be a career risk not to have seriously considered it. And I think that will be. And you mentioned essentially Bitcoin treasury companies there. It's not just holding Bitcoin on balance sheet. It's we have what we have here is a new money that's coming along, and it's better than everything else. And all the sort of scalability across time, which is the store value, but also scalability across space. And how does that then integrate itself to each company, which each company does things in a different way. You obviously got tons of different industries. It's going to affect some more than others. But this is big. This is huge. And the best analogy I can think of, which even in itself isn't enough, is the internet. And 25 years ago, possibly 30 years ago, when people were starting to talk about the internet and the adoption rate was sharply moving up, but still from a very, very low base. It's hard to imagine the companies and how they ran 25 years ago compared to now. The internet has changed so many things. And money is even bigger than transferring value, is even more than transferring information. It's even more impactful and influential. And so every company should be, even only from a defensive point of view, should be looking at how they do business and how Bitcoin can affect them in so many different ways. So obviously there's a store value. You can put some on your balance sheet. That should be pretty much a no-brainer for a lot of companies with a long time horizon. But then you've got, okay, how are you going to accept Bitcoin? If you're a retailer, for example, then you've got that. You've got the shop front. You're taking money from individuals, customers. How do you do that? How do you do that more effectively? How do you stand out from the crowd? What do you then do with the Bitcoin when it comes in? How do you pay your staff? At the moment, it will be in the local currency, I suspect. But how do you transition that towards Bitcoin? Are there other things in the company that happen, the way that you maybe incentivize staff in other ways, then actually incorporating Bitcoin could make a huge difference and really supercharge your business as we move over, who knows how long it's going to take, let's say 20 years, to move from a substantially fiat economy to a substantially Bitcoin economy. There's going to be a lot to think about, and a lot of processes within companies and organizations are going to need to change.
I 100% agree. And I also like the point that you made there. That money is such a big market. And I think that's that's what a lot of people kind of miss, and they say, oh, like even with altcoins, even if there's, as you said, there might be some technical interesting thing going on. I don't think so, but maybe just say, like, let's say there is something. Even if there's merit to an altcoin, it might actually have utility. If that's the case, the opportunity of that altcoin might be like what can it be, like a few hundred million, maybe a billion, or like whatever the opportunity of that market of that one project is, because there are also competitions coming to that and those things. For Bitcoin, it's 400 trillion, 500 trillion, whatever the money market, the money opportunity is, whatever the number is. I also heard like 800 trillion, 900 trillion. I guess every year this number will slightly grow depending on how much we print. So even if you see like, oh, there might be some other projects, you're like, but this is the real thing. Like Bitcoin is the actual paradigm shift, the actual game changer in this generation, in this civilization that we are currently in. Like, why use any brain cells for something else currently? That's what I'm thinking about.
Yeah, the market is so huge for money, as you say, and not only, maybe someone can find a particular thing in an altcoin that is that's a neat piece of technology. But one, it's probably going to get diluted because the supply of that altcoin is probably infinite. And secondly, someone else can just take that idea, and it could be built on Bitcoin, or it could be built in some other way. There's no moat, particularly around that altcoin. So you've got two huge problems. And from an institution point of view, we want to buy assets strategically. So you might have a little bit of rebalancing and so on around operating the portfolio, but essentially you're often looking for, what can I do for the next 10 years? What's my plan? What strategic allocations make sense to me given the objectives we've got, etc. And so if you look across, and we call them the regulator over here in the UK likes to describe them as crypto assets. If you look across, you've got Bitcoin, you've got everything else, and hand on heart, the everything else, can I be confident that it'll be around in 10 years? Nope. Can I be confident that Bitcoin is around in 10 years? Yes, absolutely. So there's a big difference, and I find it difficult. I would find it incredibly difficult to advise clients to use the altcoins and go into there, because it's just much more fluid, for want of a better word. And where institutions need to be a lot more strategic. I think when you combine that with a lot of institutions are quite rightly thinking about the effect that their company has on their staff and on the world, wanting to do the right things from an environmental and a social point of view. Well, having a sound money ticks so many, if not all of those boxes. Yes, not all of it may be happening. It takes time for it to happen. But having a sound money enables and gives, primarily because it gives people longer time horizons, sort of low time preference. So that is a very strong reason why institutions should focus on Bitcoin.
And that's why you also played a crucial role in getting Bitcoin into UK pension funds, if I understood that correctly.
Yes. So the way that we looked at it was that because we advise across all types of assets, and each of our clients has got different objectives, and we need to. A key starting point is saying, okay, you've got certain objectives. We've figured out what they are. We've got this range of assets that you could use in some way to achieve those objectives. Let's work through the list and see which ones are relevant and which ones aren't. So from a Bitcoin point of view, what we did is he added Bitcoin to that list of assets. And when you start then applying it to the same analysis that trustees of pension schemes have been doing for years and years and years. It's going to be relevant for some, not for others. And a key filter is what's their time horizon. And some pension schemes over here, they're looking to pass the entire pension scheme over to an insurer pretty damn quick, maybe within the next year or 2-3 years. In which case, we're expecting Bitcoin, who knows, but we're expecting Bitcoin to be short-term, very volatile, long-term to have huge potential. That's the headline, I suppose. If you've only got 2 or 3 years, you've no idea whether Bitcoin's going to be up, down, sideways. Whereas you can be a lot more confident the further out you go. And so this particular pension scheme has got a 10-year time horizon. So that's comfortably, probably 4 or 5 is probably a threshold where it starts to make sense as a small allocation within a portfolio.
Yeah, it's like if you're in Bitcoin under 4 years, you can also not be in Bitcoin. Like it's like under 4 years. If that's your time horizon, it's kind of hard to be in this asset. You probably are good. Like you probably make money even if you're under 4 years in Bitcoin. And you probably should still do it because chances are if you get into Bitcoin, all of a sudden you get educated and probably you stay longer than 4 years. That's why I always say to individual people, I say like, oh, like maybe I only want to have a few years in Bitcoin. And like, oh, go ahead and do it. I think you will stay longer if you get educated because it's one thing that I see constantly with individuals. Once they tip the dose in and they're like, oh, like I have a little bit of Bitcoin, all of a sudden they're paying attention a little bit more and they're getting educated, they're buying Bitcoin books, and all of a sudden they really transform. But the realistic time frame on Bitcoin is 10 years, 100 years, forever. That's kind of my, and it's super funny because in Austria, we have a pension fund that you cannot really choose. Like you have 3 options, but you cannot choose outside of those 3 options, and none of those options include any Bitcoin. And so I just said, okay, this money that goes to those pension funds, I never see again. If I see it again, I'm happy, but I just like write it off as a special kind of tax. And I focus on my Bitcoin and Bitcoin directly, like 100% is my pension fund. And I'm astonished how little Bitcoin plays currently a role in pension funds, even as a small diversifier. Like they can put like 0.5% in Bitcoin, and it might make like that 0.5 Bitcoin might make a difference if this goes crazy up in the next 5 to 10 years. But if it goes to 0, it's also not that bad. It's just 0.5%, like this is I think BlackRock called it a unique diversifier with really unique properties for an asset allocation standpoint. Even if you are not a Bitcoin maxi like myself, I think a small Bitcoin allocation from a portfolio allocation standpoint makes sense for people. How do you look at the allocation and why so few of them actually understand that?
Yeah, I think you're right in principle on that. So I think there's a big difference. Well, there can be a big difference between individuals and what they do with their own money and institutions. And one of the things with individuals is that we've got, normally our time horizon is decades, unless we're at a certain age or we've had some bad news. We've got a long time horizon, right? So we're looking decades ahead. In which case, that's what we're focused on. Institutions, there's a lot of different flavors or objectives that different institutions have. So some have really short time horizons. They're like almost literally, they've got sort of £100. They need to pay out £100 in a year's time. They don't have the flexibility, the capacity to have lots of volatility within that. And also a lot of institutions, they're taking in the UK anyway, taking in pounds sterling and they're paying out pounds sterling. And maybe that pound sterling is sort of fixed. So they're aiming to have, they need to pay out £1,000 per year to a particular person. That might be sort of contractually, effectively, what is happening with that particular pension scheme. In which case, there's effectively a limit on how much money they need in the scheme, in the pension scheme, to be able to pay that £1,000 a year to that particular person. Once they've got enough, they've got enough. They don't need to take infinite amounts of risk. They don't need infinite amounts of return. So that's there. I'm describing defined benefit pension schemes, which is we've got 5,000 of them in the UK. There's a select number of other countries around the world, Netherlands, Ireland, some in the US that have these, but most countries have what we call defined contribution on money purchase. And that's where the employer, the employee, similar to what you've got, although yours sounds like a state-operated enterprise. So employee and employer put in some money, and then whatever it buys at the end, whenever you retire, that's what you get. It's whatever it is. There's no promise or guarantee made in terms of what the purchasing power would be, or what it would be able to buy, or in terms of a fiat currency amount or anything like that. So there are two very different types of pension scheme. They operate in very different ways. And so it's critical that whoever's in charge of that pool of assets is thinking very carefully through whether they can justify that, not only Bitcoin allocation, but an equity allocation or some other kind of a volatile asset. And then it's a case of putting them together so that they get the right overall balance of risks. And that's one of the beauties of Bitcoin, is because as soon as you start adding it to portfolios, even at only small amounts. So this pension scheme in October was 3% of the assets. But if it's 2, 3, 4% of any portfolio like this, it's going to be probably a little bit more volatile than it would other be, the overall asset amount. But the expected return, the potential, the growth potential is much higher. And so that's the trade-off that institutions should be looking at. How much could I gain versus how much could I lose? And what we did as well for this pension scheme was we put it in the context of their specific objectives. So ideally, they want to be able to get to the position where they can hand everything over to an insurer. And maybe that'll take 10 years. And the analysis we did, which I'd encourage every pension scheme in the land to do something like this, which is say, okay, if we put 3% Bitcoin allocation in, and it immediately forces, this is worst case scenario, immediately forces zero, never recovers, what's the impact on the overall objective? Well, before, you expected to get to your objective in 10 years. Now, we rerun the analysis, you expect to get there in 10 years, 3 months. So it's obviously worse because you've just lost some assets. But it's not that bad, it's not that material in the big scheme of things. And then we looked at the other scenario, which I think we looked at the last 5 years, which was 40, 50% returns. And if they applied for the next 5, 10 years, what's the impact on your overall objective? And that brought the 10 years down to 8 years, right? So you got 10 years, 3 months, 10 years to 8 years. And so what that highlights really well is the asymmetry of returns that could come through, and why it makes sense to have a little bit of Bitcoin if you've got a long-term portfolio.
That's super interesting because it can make a huge difference, even like a small allocation, the asymmetry of it makes a lot of sense. What would you say is the current state of like pension funds and those big institutional players of understanding Bitcoin or thinking about adding Bitcoin to a portfolio, to a balance sheet, and how many do you think will maybe go ahead with some Bitcoin strategy in the next like 5, 10, 15 years?
Well, I mean, I think 5, 10, 15 years, a lot will be forced to think about it. It's one of those things. If Bitcoin survives, which I expect it to be, but obviously it depends on it. As Jeff Booth frequently says, if it remains decentralized and secure. So if it survives, then it's going to force people to look at it over that kind of period of time. If we look at shorter periods, let's say that over the next year, then I think it's going to come down to that career risk point. So the level of knowledge in the industry is, I mean, it's very different between different people, but you've got some people who maybe for whatever reason, maybe it's their personality, maybe it's because they got to a certain point in their career, they don't feel the career risk as much as they maybe used to. They're more open-minded. They're willing to say, okay, it's not dead yet. Maybe there is something in it. It doesn't mean they necessarily buy any for their clients, but it means that they open their mind and they explore it further. We then have a large number of people who are either they've got a little bit of knowledge. You know what they say about a little bit of knowledge can be a dangerous thing, because the little bit of knowledge that they might have is based on newspaper headlines from 10 years ago. You know, it's going to destroy the planet and all this nonsense. It's quite difficult then, particularly if they're busy in their day job or they have that career risk, because there's no incentive for them to explore it further. And that's a real shame. And I think it's a shame for them. It's a shame for their clients. I mean, arguably, and this is why we sort of talked about it in terms of just putting Bitcoin on the asset list and then we explore it in the same way we explore everything else, every other asset. I think we're at the stage now where if someone is, whether it's a trustee or a treasurer or a charity trustee, if they're looking after someone else's money, we talk a lot in our industry about a fiduciary duty. What are trustees or other institutions, what are they required to do to make sure that they are appropriately looking after someone else's money? I think we're at the stage now where if you're not seriously at least considering Bitcoin, doesn't mean you have to buy it. If you're not considering it, it's questionable whether you are properly fulfilling your fiduciary duty.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.